Dr. Edward Yardeni, President at Yardeni Research, joins us this morning. Very good morning to you from where we are sitting, but thank you so much for joining us, and always a pleasure to speak with you. I want to understand from your perspective how persistent these recession fears are in the U.S.
Well, clearly, part of the reasons for the sell-off on Friday was the weaker than expected employment report for July. However, we had a really close look at it and concluded that it might have been the weather. I know that the Bureau of Labor Statistics said that Hurricane Beryl, which hit Texas in early July, didn't have an impact, but still there was plenty of evidence that the weather was bad enough around the country that it might actually have depressed the data. And today's, as you mentioned, today's data on the non-manufacturing purchasing managers look pretty good. So all in all, I think the economy is still pretty resilient. I think we'll get over this latest recession scare. You know, we've had this recession fear for the past 2 years. It's the no-show recession. It's the most widely anticipated recession that hasn't appeared. And there's still concerns that it might at some point, but I don't think it will.
Dr. Yardeni, good evening to you.
Good evening.
The fears of the market and three-pronged, right? The recessionary fears, the yen carry trade unwind, which I think was the principal one, and possible lurking geopolitics. Now, my question is it possible to predict whether the extent of fall that a yen carry trade unwind can do has already happened, or is it difficult to call that out right now?
Well, it's difficult, but that doesn't mean that I can't go and agree with your answer in the affirmative to your question. I think we may really have seen of the carry trade unwind happen pretty quickly, and I think to the extent that key Japanese officials are basically saying either implicitly or explicitly that maybe they're going to be careful about any further tightening, that in turn would lead to some stabilization in the yen. It certainly has seen some improvement in stock prices in Japan. And so this earthquake that we saw in Japan, it clearly spread very quickly to the rest of the world, but I think it may be calming down already.
Dr. Yardeni, hi. It's also Samina joining in. Let's talk about what this means for countries like India. Sure, there's Japanese carry trade unwinding, but Indian markets have never been a beneficiary of borrowing in yen and investing it in Indian equity. The carry trade is our own story, the Indian rupee and the dollar, and sometimes may be a Swiss franc. So do you feel that Indian markets are insulated at this stage, and maybe we could be beneficiaries of everything else going wrong on the Japanese carry trade?
Well, I do. And look, if the Japanese carry trade is still going to be a problem, and it creates some sort of global issue in the global credit markets, causing a global recession, then obviously India would do poorly in that kind of environment. We would all do poorly in that kind of environment. But I think what we've seen is that inflation has come down quite dramatically. By the way, I think one reason that inflation has come down without a global recession, certainly not without a recession in the US and without a recession in India, is that we've actually seen a depression in the Chinese real estate market, and the Chinese have tried to offset that by dumping goods in global markets. And so we've seen a lot of deflation, a lot of price cuts in the exports of China, and a lot of high value added kind of goods, including automobiles. I think that in turn is depressing Germany, which used to be able to sell a lot of cars in China. Now they have competition with all that. So this has all allowed central banks to stop tightening, start moving towards easing. And that suggests that the global economic outlook is pretty promising. And I think the US and India both benefit from that kind of outlook.
Dr. Yardeni, just from the Indian perspective, trying to understand whether India now continues to look or looks like an increasingly attractive market from the context of foreign flows. Since the start of this year, at least, foreign flows haven't really come in. There was a thought that post the elections and post any political uncertainty being moved away, you would see that. It's been quite the reverse. Do you see that picture changing?
Well, I think that foreign flows will contribute to the bull market in Indian stocks. I think a lot of foreigners would like to just get a sense that the Modi government following the election will still be able to get through a lot of the reforms that are necessary to make the Indian economy more competitive. But a lot of that's already happening. Infrastructure spending is certainly occurring. A lot of the kind of transportation problems that India faces with regards to global companies, I think those will be resolved over time. And so I think foreign investors will continue to increasingly go to India. The only problem is it's not cheap. It's not as though it hasn't been discovered. The Indian stock market has done extremely well, but rightly so.
Right. Dr. Yardeni, one quick question. As an investor, what should one be looking to do? Should investors be waiting before they make portfolio changes? Should it be incremental tweaks? Should it be big adjustments with all the information that we have at hand right now?
Well, I have to admit that I am in sort of the Warren Buffett camp and the Professor Siegel camp that believes that stocks should be held for the long run. You buy good quality stocks with maybe paying dividends, you put them away, and you should do very well over time. Trading stocks is a full-time job. So if you have a job, it's pretty hard to do it. But I would say that this sell-off presents some opportunities, particularly in technology in the United States, as well as financials. So I think we'll see some opportunities in the U.S. And India, I think, will continue to perform well.
Okay. Well, Dr. Yardeni, thanks so much for joining in today. I've just signed up for Yardeni Quick Takes, and we'll look forward to reading In Praise of Profits.